I have learned that if one advances confidently in the direction of his dreams and endeavors to live the life he has imagined, he will meet with a success unexpected in common hours. Henry David Thoreau. My friends, let us advance confidently in the direction of our dreams. Let us endeavor to live the life that we have imagined, and our success will come. We ask 10 to 15 minutes a day in learning how these markets move, how they react. That's all it takes. I try to tell people that. The problem is folks just won't put in the 10 to 15 minutes a day. Those of you, and I can't say everyone because there's plenty of you who listen. You send me emails, you send me thanks, you tell me of your success, and it makes me happy. It's what gets me every day to keep doing this show for free. I do it for you, for the winners, the people who stick it out. But the large majority just don't have the substance. They just don't have it in them to stick it out 10 to 15 minutes a day. That's all. That's all it takes. You can do this. You can learn it. Stay with us. It's free. It's free. If you want to support us and buy the book, great. You want to be a Patreon member? Great. We appreciate that. Let's jump into things. What do we see happening? Stock market down just a smidge for the day, starting the week off. Again, you look at the Heiken Ashi candlesticks. What do you see? You see a green candlestick trying to form. Again, look at the high here of 390.56. What did we see back 390? Let's see, 398. So again, when we're looking at where the high has gone so far, it's not reached a higher high. We see the derivative oscillator still negative, losing downward momentum. Price percent oscillator flat, maybe heading down a little bit. We go to the 2-day chart. What do we see there? Again, even though it's a down day for the day, remember the prior 2-day candle ended Thursday, so this one represents Friday and Monday. But again, not reaching the high that the 2-day candle hit back when it hit 398.12 on the Tuesday-Wednesday candle last week, the 16th and the 17th of March. So we'll continue to watch, wait and see where things are going. We still have that negative push down as we look at the weekly that again just doesn't have enough energy to have a price percent oscillator crossover nor a derivative yet. That 2-day trying to, we'll see how the next 2-day candle forms. Now we look at the half-day chart. Of course, we saw that half-day chart crossover in the afternoon on Friday, moving up a little bit again, sort of hitting about the same spot as far as the high for a day and a half. Friday afternoon, Monday morning, Monday afternoon. So we'll see how things continue to shape up and move about. So that's where we are on the S&P starting the week off. A little weak as far as down 0.08%. Let me see if I can brighten my screen and see it a little bit better. 0.05%. The Qs, the NASDAQ 100 down 0.08. And look at the NASDAQ 100. Price percent oscillator still heading down. Look at this. Starting going into, again, just the first day of the latest weekly candle, but going into it with another doji after the prior week and pretty much the week before. That would be the week ending the 19th and the week ending the 26th. So we see the derivative oscillator still quite negative. Price percent oscillator heading down. 2-day chart pretty much flat on the price percent oscillator. Derivative oscillator losing some downward momentum. Red down candle, price below that 2-day trend line. So overall, the mood of the S&P is weaker with more downward pressure than the S&P. And what do we see on that half-day chart as it tries to push through at the end of the day? Day and a half of up movement, price right there on the 2-day trend line. So we'll see what stocks are doing. And again, oh, great training for you today. It's called backing off. It's about what we encourage you to do, and I hadn't put out this training in a while. I think those of you who subscribe are going to like it. If you're not a subscriber, then of course go to the website, chartingwealth.com, sign up for free. You'll get the daily reviews every day, the once a week weekly review and forecast. You'll also get all the special trainings, and the PDFs are attached every day for the daily market worksheet, weekly market worksheet, and trade worksheets, backing away to see what really's happening. That's what I want you to have. That's the special training for the subscribers today. We do that on Wednesdays. We clear our heads, step back, and look at what's really happening. That's midweek. Certain things to do at the beginning of the week, certain things at the end of the week. Midweek, we assess what's going on. We assess that every day, but we try to clear our minds and get the big picture midweek. Now, what do we see going on? Let's see. We have made our way through the Qs, have we not? Let's see. That's what's up with the, yep, we have. So we're going to leave stocks now. We're going to go to bonds. Bonds down for the day, 0.89%. And what are bonds doing? Well, we go to the weekly chart. We saw where bonds had gone down for weeks and weeks and weeks. Then a green spinning top last week. This week, so far, a red top is trying to return. I'm sorry, a red down candle is trying to return. No wick on top, a wick on the bottom. Derivative oscillator losing some downward momentum, but still quite negative. Price percent oscillator heading down. That downward angle has slowed somewhat, but still downward pressure there. 2-day chart, what have we seen happen? Well, it appears that that 2-day chart crossed over right there at the end of the, well, with the movement from Friday along with Monday's movement, we actually have a price percent oscillator crossover going up. Now again, albeit a weak one, what does that do? That gives us pause to hold off on our down movement, gives us an opportunity to get back into down movement again. But again, we would caution as far as the down movement goes. All I'm doing now is, of course, changing our candle. And I'm sorry, our arrow. We're flipping that over up to show the crossover. Now, it could, over the next 2 days, recross back over going down. What does that do for us? It gives us the opportunity to jump into another 2-day recross. Remember how good the last one was for us? So we'll look and see how that continues, but it offers opportunity. What do we see on the half-day chart? Down in the morning, further down in the afternoon, pushing through the weekly trend line. Still have that 2-day down below. Wait, whoa. No, we don't. We're going to switch that 2-day over as best we can with what we have. There we go. So that is where we are as we end the day on Monday, first day into the week on bonds. Now we switch over and we take a look at gold. Gold down for the day, 1.19%. And look at it move. Now, when we go to the weekly, you can see how gold bottomed back on the week ending the 12th of March. It then slid sideways for 2 weeks, and it's trying to start this week with some decent down movement. Price percent oscillator is, again, heading down a little bit. Derivative oscillator still quite negative, losing downward momentum. We go to the 2-day chart, and of course we had that 2-day crossover, which pulled us out of any down move if anyone had stayed in gold. After that prior 2-day recross going down, you got to go a ways back in time. It was back on Thursday, the 14th of January. That is where that prior 2-day recross occurred. And again, this latest one took us out of the down move. If it crosses back over, particularly at the end of the next 2 days, that would be, we have Tuesday and then Wednesday at the close of the market on Wednesday, might give you an opportunity to jump back into down move on gold. I'm hoping gold has bottomed out and will start moving up and give us a weekly vertical crossover going up at some point in the not too distant future. But I don't know if that's going to happen. I'm going to stand by and let the charts guide me as to what is really going on. I'm not going to prognosticate and guess. I'm going to follow the trend. Now, what do we see on the half-day chart? We can see where that half-day crossed over strongly going down in the morning, piercing the 2-day trend line. we see the wick on that morning candle pushing through the weekly trend line, and then some more down movement in the afternoon, but not hitting that previous peak in the morning. So that's where we are on gold. Lastly, let's take a look at Bitcoin. Bitcoin up almost 9%. Now, for most things, you would see a whole lot more happening on the chart than, of course, you see with Bitcoin. We can see where Bitcoin peaked back on at $57,466.42 back on the week ending the 19th of March. This past week, we saw sort of a red open box spinning top, and so far this week, of course, a bit of a green open box candle. Now, price percent oscillator still heading down, derivative oscillator gaining downward momentum. Look at the 2-day chart. All that movement simply flattened the price percent oscillator, derivative oscillator still heading down. Green spinning top is what we have now. What are we waiting for? Well, hoping that Bitcoin will catch some fire, give us the opportunity to jump into a practice trade with a 2-day recross going up. But if things still stay with that down movement, as we see on the weekly chart, and just the flatness fades and heads down on the 2-day, then of course we'll keep waiting for Bitcoin to bottom out and then move back over going up. The up movement we saw in the day, and we see this on the chart in the afternoon, was a nice jolt up. Still not enough energy with all of that downward pressure to cross over even on the half-day chart yet. So we'll continue to watch, wait and see. That's where we are as we end the day on Monday. I've been traveling, took the red eye back from the West Coast yesterday, and I hope that my presentation today has been decent. I'm going on maybe 2.5 hours of sleep since Sunday morning, so thanks for bearing with me. So appreciate you being with us no matter. Now, that is an object lesson. No matter what else is going on in my life, I am dedicated to putting this show out every single day, come hell or high water. And I just want to urge you to just invest in yourself enough to spend 10 to 15 minutes a day, every day, no matter what, making sure you follow the markets, you practice trade, you do what you need to do to get this knowledge. Thank you again for all the Patreon support. Thank you for the book purchasers. God bless. All the best from the whole team at Charting Wealth World Headquarters.